Lunchables, Kool-Aid, Jell-O, Velveeta, some of America's most beloved products, all manufactured by the Kraft Heinz company, with 6 $1 billion brands, nearly $27 billion in annual revenue, and more than 2 centuries in business between two labels.
Kraft Heinz, separately and together, has been at the forefront of what's happening in food over the past 100 years. You have a significant responsibility for what that means to deliver elevating food experiences for consumers and families.
You think Oscar Mayer, you think Kraft mac and cheese, you've got Lunchables. Those are iconic brands that consumers have grown up with in a lot of instances and that they've known for a long time.
Yet, in less than a decade since the company's $49 billion megamerger,
fundamentally, what went wrong with Kraft Heinz?
The stock's down over 25%.
It's a poorly run monstrosity like Kraft Heinz.
Kraft Heinz has been such an unmitigated disaster.
it's been called one of Warren Buffett's worst investments.
But we paid too much for Kraft.
Ultimately, what Wall Street and everybody else missed is that in packaged food, you need to innovate. You need to invest in your brands. You need to invest in R&D. You need to keep up with consumers' changing habits and tastes. Already leading into the merger, both Kraft and Heinz were not doing that.
The original merger got wrong was the idea that they could conclude this transaction and then buy their way into new growth by tacking on a lot of acquired companies using the bigger size and scale of the combined Kraft Heinz company. And that didn't work out.
As consumer preferences shift and inflation pushes shoppers to the massive private label industry, can the king of mac and cheese and condiments make a comeback? Despite a market cap of about $45.5 billion and a portfolio that spans over 200 brands in nearly 200 countries, Kraft Heinz's stock has been on a steady decline since 2017.
Investors have soured on Kraft Heinz just because of years of underperformance. Long are the days of the iconic blue cardboard box mac and cheese that we all grew up with. It's just not what our kids are into or what we're necessarily giving our kids. It's processed food when the trend is moving away from processed. It's not fresh.
In 2023, net sales only increased by 0.6% compared to the prior year. That was partly due to price increases, which affected many packaged goods companies.
Given that SNAP benefits were reduced in March, that had an outsized impact in terms of their performance. In addition, they faced some trade timing, retailer inventory deload, things of that nature.
Shortly after being named company CEO, Abrams Rivera delivered underwhelming fourth quarter 2023 results.
In the short term, we saw that our food service business actually is growing faster than our competition and gaining share. And that is both in the US and globally. We're going to maintain a disciplined approach to how we think about pricing. At the same time, we also recognize that the consumers are looking for better value in all the choices they're making.
It all started in 2015, when two of the biggest companies in America merged to become the Kraft Heinz company. The $49 billion deal was engineered by Warren Buffett's Berkshire Hathaway and Brazilian private equity firm 3G Capital. The two had partnered to buy Heinz for $28 billion in 2013, the largest ever acquisition in food industry history.
There were great expectations from investors with that duo coming in to put this deal together, that this was going to be a juggernaut and a hugely profitable investment. It's one of the biggest surprises, ultimately, what happened next.
There's a huge cultural disconnect in the early stages between the Kraft and Heinz side of things. Heinz had always been kind of like a family-run company, very paternal. And you merged it with Kraft, which by the time of the merger had already been owned by 3G for a while. And so it had that kind of private equity, meritocracy.
In 2017, as part of the original goal, Kraft Heinz pursued a $143 billion takeover deal with Unilever, but it was immediately rejected.
The Unilever people were horrified at this because culturally, the two companies could not be more different. Unilever basically rejected it, and Warren Buffett wasn't going to be participant to a hostile takeover. He just doesn't do that as a matter of policy. That kind of left the Kraft Heinz group with not too much in the arsenal.
3G Capital was known for its aggressive zero-based budgeting strategy, something that had been successful at companies like Anheuser-Busch InBev and Burger King. In 2019, a group of shareholders filed a class action lawsuit alleging that 3G's indiscriminate cost-cutting measures had gutted the company's ability to generate revenue.
They bring in ruthless cost cutting. They load the company up with debt. With luck, they're able to create a more streamlined operation for it. And then either they exit or they hold it for the profits.
Turns out when you're a packaged food company that needs to keep up with consumer tastes and habits and grow, you need to have innovation. The 3G cost-cutting model certainly can help lead to profitability, but on the growth plan, if you're not doing major acquisitions to grow, which had been the strategy of AB InBev, then it leaves the company without much.
Kraft Heinz's reputation took a further hit after reporting a trifecta of bad news in February 2019. An SEC probe into accounting misconduct, cuts to its annual dividend, and that it would be taking a $15.4 billion asset write-down for brands like Kraft and Oscar Mayer. The company wiped $16 billion in market value in a day.
This is a disaster of a stock.
It's been a disaster since the beginning of 2017.
They announced a more than $15 billion impairment charge, meaning their brands weren't worth as much as they had been holding them on the balance sheet.
And Warren Buffett publicly expressed his regret.
We overpaid in Kraft. I don't think we overpaid in Heinz. The business does not earn more just because you pay more for it.
The company announced a new CEO in April of that year.
He made a vow that it was really going to be a transformation. He recognized the company was in a pretty bad place. And so the way he would describe it is he started with the people. Let's get the people on the team. He spent a lot of time on the front lines talking to the people in the factories and talking to the people in the plants.
Kraft Heinz settled with the SEC for $62 million in 2021 and reached a $450 million settlement in the class action lawsuit. Following the merger, Berkshire Hathaway and 3G held 51% stake in the company. However, over time, 3G has quietly sold off its shares. And according to FactSet, in the third quarter of 2023, the Brazilian private equity firm left Kraft Heinz for good. Berkshire Hathaway is the sole major stakeholder as of April 2024. In a comment to CNBC, a company representative wrote that 3G has not been involved in the management of Kraft Heinz, nor have they been on the board for several years. We did learn from their recent filing that 3G exited Kraft Heinz stock entirely in 2023. The pandemic gave Kraft Heinz the opportunity to course-correct some of its mistakes.
Consumers are stuck at home, and they're looking for products that they trust, that they know they have a familiarity with. And we think that that's really what steadied the business and has led to the improved performance, but we don't believe that's reflected in the share price.
It fixed its relationship with its retail partners by delivering products on time and keeping up with demand, something smaller companies couldn't.
I think one of the biggest things we're incredibly proud of is we've reset the fundamentals over the last 4 years. And that is re-engineering from the inside out and a focus on growth.
As it refocused on its core brands, the company trimmed less popular products from its portfolio. It sold off part of its cheese and nuts businesses for more than $6.75 billion between 2020 and 2022.
That helped them in a couple of ways. It allowed them to pay off some of that debt, and it allowed them to create some cash flow, which would then go into innovations.
Its innovative ketchup mixing dispenser has brought the company recognition.
They take that information about how consumers are adjusting the flavors, and then they sell that information back to restaurants, which is kind of interesting because if you're making out of hot chicken, it actually turns out it matters if it's jalapeno or habanero peppers that people prefer.
Beyond that, Kraft Heinz is exploring ways to offer more promotions and create value packs geared towards its core customers.
We're actually increasing the number of products we have available in Club, whether it's our Meal Club, whether our mac and cheese. We are making sure we have more availability of the dollar type of products, so that way we can make sure that they're accessible to our brands.
And there's more room to grow and new channels to try.
They will try to deepen and elaborate on the brands they have that they think are strong. So if you take just Heinz ketchup as an example, there's now 8 different flavors of Heinz ketchup. So they're going to try to appeal to more and more fine-grained groups of consumers.
In 2024, it launched plant-based versions of its beloved mac and cheese and Oscar Mayer hot dogs. The U.S. plant-based market is projected to grow about 115% between 2023 and 2030. Emerging markets are the company's next play. Kraft Heinz reported they grew double digits in its 2023 full-year earnings. In contrast, its U.S. retail sales only grew 2%.
Kraft has had better sales in emerging markets and across the world lately. It's still a smaller part of their business, so it's not moving the needle, but it is a potential growth spot right now for a company that is needing growth. The big hope around the merger with Kraft and Heinz is that because of Heinz's international exposure and Kraft being more than 90% of North American business, they would have avenues for growth overseas. And that still is a promising aspect.
But first, the home market.
For the first time in our history, we have a 10-year strategy, and that puts our core brands and our portfolio at the center. It puts innovation at the center. It puts our people and our culture and the cultural transformation at the center.
They are making investments. They are supporting the business. Even low single-digit performance is decent growth for a mature U.S.-based packaged food company. There could be opportunities to do acquisitions.
Still, experts say it's unlikely the company's stock will return to its all-time high of about $98 anytime soon.
They might not be outperforming by a material extent. They're also not materially underperforming those domestic center of store peers.
They've gone from really being very badly managed and having very poor results to now being sort of ordinary. They're kind of on track, but there are a lot of headwinds.
A number of industry-wide challenges pose risks to Kraft Heinz too. Consumer habits have changed dramatically.
We snack more instead of cooking at home bigger meals. We don't do TV dinners anymore. When you think of some of the Kraft brands, that's what you think of.
Inflation has been especially brutal on packaged food companies. Kraft Heinz increased its prices by 15.2% in 2023.
Now we're at a period where the consumer is not putting up with that. The more value-oriented consumer makes it challenging for a Kraft Heinz to engineer a turnaround in its core portfolio in this kind of environment. And that's what food companies are dealing with right now.
Instead, consumers are choosing value over loyalty, trading down already cheap products for even cheaper options, like private label brands.
The explosion in private label brands from companies like a Kroger or a Costco or Walmart has been very competitive. They're lower in price, and for a value-oriented consumer that's looking for ways to save money and trade down, that's an easy way to do it.
Grocery stores with their own private labels have an easier time tracking shopping habits, and so can launch new products faster than the competition. Smaller companies can also innovate quicker.
The extent to which e-commerce and social media have really grown, that's enabled these smaller niche brands to derive and to gain proof of concept much quicker and in a much more cost-effective manner than they would have been 10, 20 years ago.
Private label sales outpaced national brands in 2023, bringing in $3 billion more than the prior year for an all-time record of $233 billion. More than half of shoppers surveyed said they plan to buy much more or somewhat more private label brands in the future.
As you take a look at private label, the thing that we focus on is value for money for consumers and what that actually means in terms of how brands play a role in their lives. There is pressure from private label, but there's always going to be a role that brands play.
It's a threat for all of the branded food products, and it's potentially one reason why we've seen very little growth out of these companies for the past few years.
Weight loss drugs, like Wegovy and Mounjaro, could impact the market, though experts say it's too soon to tell.
A lot of things that Kraft Heinz sells are the kind of things people overeat on, right? They're full of fat, they're full of sugar, they're full of all kinds of ingredients and preservatives and stuff like that. And what these drugs have been shown to do for many people is they just depress the cravings.
Undoubtedly, Kraft Heinz's relevance hangs in a delicate position, but with 3G's aggressive management style out of the picture and a continued effort to innovate, it's possible Warren Buffett and his team can continue to deliver results. It remains to be seen to what extent.
It's not obvious to me that there's going to be some food thing that all of a sudden billions of people are going to be turning to it. I think that's more something that you'd see in a tech or a digital product. But I think if you have good, strong operations and continue to focus on the brands that people really care about, I think that's probably the most promising direction.